Attorney Coral. I am Attorney Coral Pleas, the host of the show. Glad to be with you here today. I had a few weeks there where I wasn't able to be live on the air. I've been real busy with Columbia Savings and Loan Association, which sponsors my show, and there are great things happening at Columbia Savings and Loan. We have a whole new staff that's doing a great job onboarding and learning their respective positions. So this morning, I would like to give a shout out to our team, basically the security, which is Mr. Douglas Clark and Eugene Woods. And I'd like to acknowledge the other staff members. Kayla is a newcomer to the bank, and we welcome her. We have Danielle, who is also a newcomer, and we are happy to have her on board, as well as Yumika. So we've got a fresh team that is off and running, doing great things. And while I'm here, Dr. Reverend Mose Fuller is at the bank holding things down so that I have an opportunity this week to come and do the show. Had been real busy, tied up with the new staff, but I'm glad to be back, everyone. So thank you for having me. We had been talking a lot about estate planning for a number of weeks, and then we shifted gears and started to do a series on entrepreneurs and business leaders. And we had some great guests that came through, including the president and CEO of Columbia Savings and Loan Association, Mr. Ernest Jones. And there were others that just came in and did a wonderful job. I'm going to go back next week and pick up the series on entrepreneurs and business leaders. But today I decided to segue a little bit and to talk about credit scores. And we'll probably need to do part 2 to this show that will talk a little bit more about how to improve a credit score. But today's show is going to be educational, a little bit of background and information relating to credit scores, because quite honestly, I've been getting numerous requests to talk about credit and how to increase credit, and people that have been concerned about different I'm going to call it hits against their credit, like if something goes wrong, if you don't pay something on time, and that hits your credit report, and it can drag down your score and cause some negativity. We'll talk again, probably more in a second show on this, about what you can do about those things. But this is the reason for the topic. I know I've talked about this a little bit earlier in the year, but it's such a big one and it concerns absolutely everybody. So I thought I'd bring it back and we talk about this a little bit again. So let's see how far we get with it today. I'm anticipating already that this is something that we'll, need to carve out at least one more show to continue to talk about. So today's show will be informational, not giving legal advice, because this isn't the forum for that, nor am I a credit repair expert, but I will be giving some information that is exactly that, informational. So I'm also going to invite people to call in at 414-444-5250. That is 414-444. Jermaine is prompting me a little bit because I need help.
5253 as well.
Okay, 5253 as well. So that's 414-444-5250 and 5253. Okay, he's going to get me together yet. He's told me that a few times, but yeah, I have a trouble unless the number is posted right in front of me. Quite honestly, I don't even know my own mother's phone number anymore. Everything gets programmed into the phones. So I just, I don't have to think about that stuff anymore. So I don't. Okay, so if you have anything that you'd like to add to the discussion that I'm about to begin, we just want to share information today and, just bring people up to date. So I'm starting very, very basic. So what is credit? Okay. Credit is the trust that allows one party to provide money or resources to another party. So simple as that. Now, typically what this means is that there's some sort of either a bank or some other, maybe a finance company or some other party that is considering providing money or resources to a consumer, someone who is looking to obtain credit. Okay. And how do they do that? Well, one of the things they do is they consider a credit score. And what is a credit score? Well, a credit score is a 3-digit number, typically between the range of 300 on the low end up to 850. Okay. And that number is designed to represent your credit risk or the likelihood that you will pay your bills on time. Creditors, such as I mentioned, for instance, a bank, or I mentioned also a finance company. There's other creditors, could be a credit card company or so forth. There's lots of other creditors, but creditors look at your credit score as a factor when they're deciding whether or not to approve you for a new loan or a new line of credit. So you may say, okay, what is considered a good credit score? Well, within that range of the 300 to the 850 that we talked about, if your score, and before I even say this, please understand that these are generalizations, that there's different models and so forth in terms of where the cutoff is between poor and fair and so forth. Um, okay, I see we have a caller holding, but let me just get through what the credit score ranges are, and then I'll pick up the call. A poor credit score is generally considered if it's between the numbers of 300 all the way up to about 579. And fair credit is considered from 580 all the way up to about 669. Good credit is considered between about 670 and 739. And very good credit is considered at about between 740 to 799. And excellent credit is considered between the range of about 800 to 850. Okay. So most institutions or potential lenders, would like to see you have at least good credit. Um, doesn't have to be excellent. Um, some instances, other depending upon the organization, they might look to a higher score. But this is just to give you a ballpark, just to have some idea, because I think a lot of times people just don't know. Like you may first of all, you may not even know your credit score. Secondly, if you do, you might not know. Is it good? Is it fair? Is it poor? I saw that the caller dropped, so I figured I would just continue my thought here. If they'd like to call back, that's perfectly fine. Um, the national average credit score is 695. So the national average is in the good range. The good was at 670 to about 739. So 695 is apparently the national average based on just some recent research that I was able to do. Now, you may have also heard of FICO scores. FICO is an acronym, and it just stands for Fair Isaac Corporation. That's the name of a company that developed a credit scoring model, and it's used in over 90% of lending decisions in the United States. So you may hear me use the terms interchangeably between FICO scores and credit scores. I may use those terms interchangeably because that's essentially what it is. Um, but I know that I didn't want anyone to um, think that if I say FICO score, that I'm talking about anything other than a credit score. That's really the generically how I'm referring to all of this today. If you've ever applied for a credit card or a car loan or a mortgage or some other type of credit, there's a good chance that your lender used your FICO scores to help them decide two things. Number one, whether or not to approve you, and number two, what terms and rates that you qualify for. Okay, I see we have a caller on hold. Caller, go ahead, please.
Good morning to you, sister.
Good
And
morning.
yes, ma'am. Assalamu alaikum to you. I'll just call to give you a compliment of encouragement because what I know what you're doing is one of the vital things that our community needs. The science of business, and business is a science, and that is one of the things that the most honorable Elijah Muhammad said that we would not be taught. And what you are providing to our people is very, very vital. Um, so your information is it's important, and I'm thankful that you are on the airways providing us economic capabilities or information that could lead to uh, better economic opportunities as well. So you are a scientist of business, and I applaud you, sister. So continue. Thank you.
Thank you so much. And I
Yes,
appreciate
ma'am.
that. I hadn't thought of it that way as a science of business. Okay. Received. Thank you so much for that compliment. And yeah, that's what it's all about. I mean, and that's why we're here to provide information to the community to better ourselves. And today we're talking about our credit scores, which it matters because it affects whether, first of all, whether or not a lending decision will go in your favor or not. But secondly, it affects the rates that you get. So if your credit is not up to par, whatever credit you get will cost you more than it would someone who has a higher credit score. So, from a business standpoint, that's absolutely correct. So, thank you so much for calling in with that information. Business science, I love that. Um, okay, so that's exactly, he took the words out of my mouth, really, because that's what I was just about to talk about. That, that your credit score is considered in whether or not to approve you and what terms and rates that you will qualify for as a result of your credit score. So, FICO also periodically updates its scoring models to be industry specific. So, there's um, additional models that they use rather than the 3-digit scores that I think we all are kind of familiar with that we talked about a little bit already here this morning. But they also have industry specific scores such as auto lending scores and credit card industry scores. But for today, I just want to talk in general about what most of us know and understand as a 3-digit credit score, so that we don't get too far into the minutia of all the different avenues that are out there. So okay, so most people are aware of the three main credit bureaus. Um, one being Experian, um, second Equifax, and thirdly TransUnion. And those were in no particular order. That's just the way that I have them written down. Those are the three main credit bureaus. They're not the only resources that are out there, but those are the prominent ones that most people know and deal with. So each of these three credit bureaus calculates a score based upon information that is in your credit report. So, before I go any further, I'm going to stop right here and tell everyone how to get a free copy of your credit report. Okay. While you're getting something to write with, I'll just go on and talk a little further. There's a saying, and this is not my saying, but I've heard it said many times and I've read it somewhere, that you manage what you measure. It was in one of the leadership books. I'm going to look up whose quote that is one day so I can give them proper credit. I'll just tell you for today that it's not mine, but manage what you measure. And I always remember that because, in other words, it's so important to review your credit report so that you are aware of what's on there. Um, it can be daunting if, let's say, for instance, if your credit score is not so great and you know that you've got bad credit. Well, if you stick your head in the sand and you don't take a look at that report, then you can't fix it. You can only manage what you measure. In other words, you can't improve it if you don't take a look at it. So, without further ado, I'd like to just remind everyone that you do have the opportunity to get a free copy of your credit report every year from each of the three bureaus that I mentioned at www.annualcreditreport.com. That is www.annualcreditreport.com. Or by calling 1-877-322-8228. Again, that's 1-877-322-8228. So I encourage you at least once a year, free of charge, to either call this number or go to the website for annualreport.com. Pull that free copy of your credit report because you cannot manage it if you don't measure it. If you don't see it, you can't fix it. Let's not stick our heads in the sand and just hope that how we'll have good credit, because that's just not the way that it works. Everyone should, at my recommendation, pull your credit report at least once a year and see what's there. Sometimes there are truthful things there that you need to fix and you need to handle better. But sometimes there are things that are there that are in error. And if you do pull your credit report and find that there is something listed that is incorrect, there's laws that protect you, because there's federal laws that basically say that everything that is reported to your credit report has to be 100% accurate. So if you, for instance, have a name that may be similar to another person, honestly, when I've seen this has been, if there's a father-son relationship, it happens sometimes. If the son is a junior and he and the father share the same name, it can sometimes happen that they pick up hits from each other's credit, and it's not always a good thing. So that's just one instance, but there's other circumstances. And again, I think we're going to take a separate show to talk about all of this a little bit more in detail. But there's other possibilities of errors and mistakes being made where, you want to take a look at that credit report, because if there's something on there that is not accurate and you dispute what may be on there, then you have an opportunity to potentially have something corrected. Well, if it's an error, you will have a chance to have it corrected. Okay, so before I go on to talk about the 5 key ingredients of what the FICO scores considers, looks like we have another caller holding. Caller, please go ahead.
Question.
Yes.
Yes, I was listening to you. I mean, you guys doing a great job in the people of color community doing this work. But I was looking at a situation because I have decent credit. It's nearly 770. But,
wow, that is good. Mm-hmm.
And I don't really use it for much of nothing. I've bought a couple of houses, a couple of places, and everything I bought, I always pay cash for it. So I only really use my credit for, it keeps the interest rate down on my insurance and all that kind of stuff. And I noticed that. But I've been thinking about venturing off into more business and using my credit to go there instead of using my personal money. What you think about that?
Yeah, I hear of that. In fact, there's an attorney that I know, and I'll answer it more based on an example that comes to my mind rather than really
Okay,
giving.
I can hang up.
Sure, and I'll proceed to answer the question. Thank you very much for the question. There's an attorney that I know that told me years ago when I first started practice, don't use your money to finance the business. Take a loan from a bank and use bank's money to finance the business. Well, that's a challenge for someone who's young in business, as I was at the time, because most lending institutions are not going to lend you until you've been established for a certain number of years. And I sometimes jokingly say that institutions won't lend you money until you can prove to them that you don't need it. So that's kind of in my mind what I've experienced and what I've seen in that regard. But I would say that that's something, maybe even if you sit with a banker, that they can give you a little more guidance, because they can talk to you about interest rates and so forth and that sort of thing, to just make sure it makes financial sense to use money other than your money. Maybe you want to store your money up and invest it somewhere so it can grow and, give a return for you. So I don't want to get too specific of an answer here. And it looks like Jermaine is playing the music that's telling me that it's time for us to go to a break. I hope I answered your question, at least in general terms. Thank you so much for calling in with that. We will be right back with more on credit reports on the Money Talk series, sponsored by Columbia Savings and Loan Association. Thank you so much. Welcome back to Money Talks with Attorney Coral. We were talking about credit scores before we went to break. And earlier in the show, I was encouraging everyone to obtain a free copy of your credit report. So I'd like to just give that information out again, and I'll give it one more time before the show wraps up. So in order to get a free copy of your credit report, you can go to www.annualcreditreport.com. That's www.annualcreditreport.com, annualcreditreport.com, or by calling 1-877-322-8228. So important to pull a copy of that credit report and see what you're working with. Okay. Now, people are probably wondering, if I were listening, this is what I would want to know. Okay, you're talking about these scores, Attorney Pleas, between 300 and 850. How are these scores calculated? How, based on the information from the credit bureaus, are these numbers determined? Okay, so that's what we'll talk about next. There are five key components that FICO scores consider when they are arriving at your credit score. Okay. And each of these five areas bears a different weight on what your final credit score would actually be. So, for instance, your payment history is considered, and that amounts to 35% of your score. So that's a huge factor, right? It's 35% of your score. The next is the amount of debt that you may have, which is considered as 30% of your score. The length of your credit history is the third factor, and that makes up 15% of your credit score. New credit makes up 10% of your score, and your credit mix makes up the final 10% of your credit score. So those are the five things that are considered when determining what your credit score is. Number one, your payment history. Number two, the amount of debt you may have. Number three, the length of your credit history. Number four, whether or not you've got new credit, and we'll talk a little more details about what that means. And last but not least, the credit mix. And by credit mix, that just means the type of credit that you have. Do you have a mortgage loan? Do you have a car loan? Do you have a credit cards? Those are all different types of debt. Okay, so that's what's considered when looking at a mix of credit. Let's talk first about this payment history component, because that's the biggest chunk of your credit score, 35%. Payment history takes into account how you've paid your bills in the past, whether you've paid on time or whether you've been late, or if you've had missed payments. That's a very important factor in the credit score. The more severe and the more recent and or frequent the late payment information, the greater the impact that it has on your credit score. What that means is a slow payment history or delinquency of payments has a lesser weight on your credit over time. So if you've had late payments sometime back, well, it's still going to show, but it doesn't have as high an impact as it would if you were late right now, or if you were late last month or the month before. So the more recent the delinquency of any payments that you have, the more weight it's given in terms of determining your credit score. So there are different types of accounts that are reviewed with respect to payment history. So let's say, for instance, credit cards like a Visa or a MasterCard or American Express or a Discover card. Those are considered credit cards. There's also retail accounts. So that could be store credit cards. Some of the department stores have different credit cards. Installment loans, and an example of that would be like a car loan, right? Um, Finance company accounts are another factor, and then mortgage loans. So sometimes people ask, hey, wait a second, a mortgage loan is an installment loan. Yeah, technically, you can say, but they're usually mortgage loans just stand in a category of their own, even though it is a type of an installment loan. But mortgages are so significant and are typically the greatest debt that any person has. That's usually the case, not necessarily always the case, but they are considered in their own category because mortgage loans are a very big deal. That's the simplest way to say it. The other thing that's considered with respect to payment history is what a category that they call public record and collection items. And so that consists of things such as bankruptcies or foreclosures, lawsuits, or even wage attachments. So, lawsuits, that just means that if someone actually sued you for money, and if they, in fact, were able to win the case and take a judgment against you and put a judgment against your name, that's something that will show on your credit report as well, on the public record and collection items section of the credit report. Um, and again, as talking about the details on late or missed payments, um, what's considered, first of all, how late were the payments? How recently did the late payments occur? How many late payments were there? And how much was owed? So, all of these are factors that is considered with respect to the payment history. Um, People who tend to have higher credit scores tend to show no missed payments at all. Um, Only about 1% of people with very high credit scores have a collection listed on their credit report, and virtually none of the highest people with the highest credit score have a public record listed on their credit report. So it's just an idea so that you can kind of gauge where you are with things. And again, I know I keep saying this, but I don't want people to despair if they know they have these sorts of things on their reports. So we're going to talk on another show about some of the things that you can do to improve your credit score if you do have things that are out there, such as late payments or lawsuits or even bankruptcies on your credit report. There are things that you can do. Some of it may even just be the passage of time, because over time, some things are going to fall off. But like I said, we'll talk a little bit more about that on another show. Okay, so the second component in your score that we talked about is the amount of your debt. So I said earlier, it's about 30% of your score. So that means it's a pretty big deal. Um, so what is considered there? It's the amount of credit you're using and how much debt you owe, right? Those are important factors. The total balance owed, how many accounts have balances, and how much of your available credit you're using. Those are some of the specific factors that are considered. So they look at the total amount that's owed across all of your accounts. So generally, your total balance on your last credit statement shows up on your credit report. So that's something that's considered, okay? The total amount of debt that you owe. Um, then they look at the amount owed on specific types of accounts, such as a revolving or an installment account. This is in addition to your overall amount that you owe. It's also what's also considered is the number of accounts with a balance. If you have too many accounts with a balance, that could indicate a higher risk that you are overextended with respect to your credit. So, and I just have to have a little caveat or a comment here where I've seen this really show up, and it angers me really to even talk about, because it's often when kids are off at college and they get all these solicitations in the mail. Hey, apply for this credit card, apply for that credit card. And let's say they're able to obtain easily a number of credit cards. And, that tends to be an age where you might not be fully responsible yet. And you decide, oh, this looks good. You get these credit card solicitations in the mail and you fill them out, and then they grant you the credit and you get $1,000 here, $500 there, 2,500 here and there. And some a 20-year-old will go out and swipe the card and run up debt, and the next thing you know, they've shot their credit. And it's not good, because too many accounts with a balance will reflect negatively on your credit report. So in my opinion, it's kind of predatory, for on behalf of the companies, because you're dealing with youngsters. Yes, maybe they're legally adults, so they can sign for things and get themselves in trouble, but before they really understand what credit is or how credit works, it's kind of hard to start off life already in debt. So I know that one of the things that I had just thrown out there for consideration before, that if you are the parent of a college aged son or daughter, one way to help them establish credit. Now, again, this only applies if you yourself are responsible with your credit. If you know that you're like the gentleman who called and you've got a 770 score, I mean, you are, you're up there. You're in very good standing in terms of credit. So let's say you're able to secure a credit card, and that you know that you pay your credit card on time every month without fail. Some people consider that they may add their son or daughter's name to their credit card. So again, I'm talking about college age, youngsters that you may, as a parent, choose to add them to your credit card account. Now, hear me very clearly. What I am not saying is to give them a card and let them go swipe it and run up your credit card. That is not what I'm saying. I'm saying that if by adding their name to your card, if you pay on time and you're not extreme with the usage of the card, and you know that you're handling it responsibly, by just having their name on there, it can help that young person build and establish credit of their own, just by virtue of being connected to your responsible credit history. So that may be a way to give your young person, your young adult, a good, foothold into the world of credit by the time they graduate from college, to have some solid credit established that you helped them establish without giving them a card in order to misuse. So I hope I said that clearly. But that is something that's a factor to consider. Okay. Again, so back to the amount of debt. Another thing that is considered is the credit utilization ratio on revolving accounts. So this has to do with how much credit that's available, right? So let's say, for instance, that you have a credit card that has for sake of simple math, let's say a $1,000 limit on your credit card. It is recommended that you use no more than, well, it varies because I've read different things, but anywhere between 20 to 30% of the credit that's available to you at any given time. Okay. So, in other words, even though you have $1,000 limit on your credit card, it may reflect negatively on your credit report if you use more than 20 to 30% of that credit that's available, right? So let's say I have $1,000 limit and I use $300 of the credit. Well, stop right there because you will still it'll when it's reported to your credit report or to the credit bureaus, it'll show 30% usage. Okay, in most instances, that's considered to be okay. But let's say I regularly use $500 or $800 of my $1,000 credit limit. Well, then that's a red flag once that reports to the credit bureaus because that would show only 50% available credit or 20% available credit because I would have used 50% if I spent $500. If I spent $800, I've now used 80% of my available credit, and I have only 20% of my available credit that is available to me. So when that gets reviewed by the credit bureaus, that reflects negatively because they're going to think, oh no, this may be someone who's struggling or who's about to struggle because they've got 80% of their available credit all tied up. So that number, that percentage is too high because it creates a red flag in the when your credit is being reviewed. And that's something quite honestly that I didn't know until I started researching these things. So part of the challenge with that type of circumstance is I use the example of $1,000 just to keep the math simple, but let's just say we make it even easier. Let's say people do get credit cards with, let's say, a $300 limit. Okay. Well, if you use more than $100 of that $300 limit, I mean, you have exceeded the 30% rule, if you will, because now you're at 33%, right? So it's very easy if you've got a credit card and the limit is so low, if it's only $300. But if you go out and use $300 of that credit, you have maxed out the available credit that is there for you, and it will result as a negative impact on your credit report. So be mindful of that. Okay. The other thing with respect to the amount of debt is what is considered is the remaining amount that is owed on installment loans. So let's say you borrowed $10,000 to buy a car and you've paid back $2,000. Well, you still owe 80% of the original loan. So if you pay down installment loans, it indicates that you are able to manage and repay the debt. So that'll happen over time. If you just regularly, every month, you make your payment, it'll go down, it'll go down. But I think the inference here is, hey, if you're able to pay a chunk of it and pay it down and then pay the rest off in installments, that can have a positive effect on your credit, whereas still owing a very significant amount of the debt does not have a positive impact on your credit. So these are just some things to keep in mind. So, okay, so let's talk about um, people with the highest of credit scores, right? And what is the national average with respect to the amount of debt that they carry based on the research that I did? Well, the average revolving credit utilization ratio is less than 6%. So that's pretty low. Um, Probably in part because they have access to higher credit limits, right? So some of the people that are in the top percentage with respect to their credit scores are typically not with $1,000 credit limit. They may have a $25,000 credit limit or a $30,000 credit limit. So then when you look at 16% or 6% of that, well, now you are talking, about a significant amount of money. 6% of a $300 limit is, pennies, right? Or even 6% of $1,000 limit, you're not talking much at all. But if you're talking 6% of a $50,000 credit limit, well, then they're able to spend some money. So again, it's the situation where the better the score you have, the more responsible you are with your credit, the greater credit that gets extended to you. The more flexibility you have, the more you can maneuver. Okay. Um, the people with the highest credit scores tend to have an average of only 3 accounts that are carrying a balance. So that goes back to my example of the college kids. They get all these solicitations in the mail and fill out, I don't know, 10 of them. And all of a sudden they've got all these accounts open, and that turns out not to be a good thing. People with the highest scores have on average about 3 credit cards that are carrying any type of balance. Okay. All right. So, number 3 is the length of credit history. This is 15% of your credit score. So, FICO scores take into account how long your credit accounts have been established, including the age of your oldest account, the average age of all of your accounts, and the age of specific types of accounts. So they're really looking at this from a number of different angles. Um, so I have a couple of examples about that too, just things that I've seen over the years. And, actually, some of this is even personal, that I can just say that I have, for instance, an account that's on my credit history based on a card that was issued to me back in the 90s. So I love that, right? That's there, because that says it's some really old credit. And that's the sort of thing that boosts up your score. Now, I had another bureau, and I think it was TransUnion. Equifax and Experian left that old card out there, even though it's long closed, which is another thing that we'll talk about next time, about not being so quick to close cards, because that can come back on you. It sounds like a good thing, but it isn't necessarily so. Um, so anyway, TransUnion took this card off, and then my score dropped, right? Because all of a sudden I didn't have this 25, 30-year-old credit anymore. So they started just considering the more recent credit. So that's something to just be mindful of. And I hear my swan song playing. So I think it's time to go to a break. Okay, when we come back, I'll remind you on how to get a free copy of your credit report again, and then we'll finish up on this, carry over some more for later, and talk about some exciting news that's coming up for Columbia Savings and Loan Association. Thank you, and we'll be right back. Welcome back to Money Talks with Attorney Coral. Thank you so much for joining us. I'd like to just finish some comments that I was making about the length of credit history and then go on to just remind everyone of some important announcements relative to Columbia Savings and Loan. But okay, so I was talking about the length of credit history being 15% of your credit score. And I was talking about how it's important if you have old accounts to try to keep them because it can affect your score if they take them off, right? So sometimes people think, oh, I want to improve my credit, I'm going to cancel these credit cards. That might not be the best way to go, and as I said, we'll talk more about that on another show, but I just want to at least leave you with that thought for right now, because if you've got old accounts on there and they were paid on time and in good standing, that actually strengthens your credit score rather than hurting it. Okay. So the age of your oldest account is considered, your average account age is considered, and then the age of specific types of accounts, right? So that's something else that's factored in. Um, the With people that have the most pristine credit, the average age of the oldest credit account is 25 years. So that's longer than a lot of people have even been alive. So that kind of gives credence to the thought that I shared about perhaps opening an account, assuming that you are a responsible account owner and you're going to pay on time, adding your college aged son or daughter to your account so they can benefit from the longevity of having that card out there, as opposed to them getting something in their own name that they can just kind of handle irresponsibly and then it'll come back to bite them. So factor that in, please, and keep that in mind. So before we go, I said I would give the information again about the free credit report. So you can manage what you measure by pulling your credit report and taking a look at it and seeing where you are, by reaching out to www.annualcreditreport.com. That is www.annualcreditreport.com, or by calling 1-877-322-8228. So the topic of credit is a big one, and I wasn't even able to get through all five of the components that make up your credit score that we talked about today. So we will pick this up again. It won't be next week because I will have a special guest joining me on the show next week. So we'll see if perhaps the following week we'll come back and review some things and then get back to talking about credit. Because again, I realize how important this is based on all the calls that I've been getting in that respect. Okay, before we go, mark your calendars that Columbia Savings and Loan Association, which is located at 2020 West Fond du Lac Avenue, will be having, I believe it'll be the third home buyers seminar this year in partnership with Port Washington State Bank. That takes place on Friday, October 4th at either 12 p.m. or 5 p.m. So there's two different sessions. There will be guest speakers from Port Washington State Bank, along with a representative from Columbia, and you will learn how owning your home builds generational wealth, how banks look at credit, how to build better credit, and the types of mortgage loans and benefits, and any available grant and down payment assistance that might be available to you. So we'll talk more about that before that day comes, but I did want to just remind everyone. And now, last but not least, there will be more to come in terms of announcements, but please, everyone, take note that Columbia, we've been talking all year about the 100th centennial anniversary for Columbia Savings and Loan Association. The actual date of the 100th anniversary is September 26th, right? So Columbia will be 100 years old in just a couple more weeks. But that is not, I repeat, that is not going to be the date of the celebration. The celebration for Columbia will take place in October 2024. October 24th, I believe, is the exact date, but there will be more to come on that in future shows. But I did want to just let everyone know that the planning is underway, and we're looking forward to having a successful event. Thank you so much for listening today. I'll be back next week, and we appreciate you. Columbia Savings and Loans sponsors the show, so a special thanks to Columbia, and looking forward to seeing everyone next.